Guess what the hardest part of making money in trading is? It's not learning technical analysis. It's not memorizing candlestick patterns. It's not even managing risk. The hardest part of trading is doing absolutely nothing. And that sounds ridiculous at first, because trading, at least on the surface, looks like an activity that requires constant action. You imagine traders staring at multiple monitors, clicking buy and sell all day long, chasing price movements and reacting to every tiny shift in the market. But the reality of profitable trading is very different. The real skill, the one that separates the traders who succeed from the overwhelming majority who fail, is patience, the ability to sit on your hands and wait. Today we're going to break down the psychology behind that idea, why patience is your biggest edge in the markets, why overtrading destroys accounts, and how to build a trading system that allows you to stay calm when everyone else is panicking. Because once you understand this principle, your entire approach to trading will change. The uncomfortable truth about trading. Let's start with something nobody likes to hear. Trading is boring. Actually, let me correct that. Profitable trading is boring. If your heart is racing every single day, if you're glued to the charts from the moment the market opens until it closes, if you feel an adrenaline rush every time a candle moves in your direction, there's a good chance you're doing something wrong. Because professional trading rarely looks exciting. In fact, most of the time it looks incredibly uneventful. The market moves. The trader watches. Nothing happens. Hours pass. Still nothing. Then maybe, just maybe, a setup appears. One trade, two trades, and then the trader goes back to waiting. To an outsider, that process can look lazy, but it's actually a sign of discipline. Because the market doesn't reward activity, it rewards precision. The market doesn't care. One of the first psychological hurdles every trader must overcome is this. The market doesn't care about you. It doesn't care if you're bored. It doesn't care if you haven't taken a trade all week. It doesn't care that you spent hours analyzing charts. The market is not designed to entertain you. It's not designed to provide constant opportunity. It simply moves according to supply and demand. Your job as a trader is not to force trades. Your job is to wait for moments when probability shifts in your favor. And those moments are far less frequent than most traders expect. The lion on the savannah. Think about how predators hunt in the wild. Imagine a lion on the African savannah. Do you think that lion chases every gazelle it sees? Of course not. If it did, it would exhaust itself. It would waste energy. It might even starve. Instead, the lion waits. It studies the herd. It looks for weakness. Maybe an animal that's separated from the group. Maybe one that's injured or distracted. And when the moment arrives, the lion strikes. Fast, precise, decisive. That single moment of action is the result of hours of patience. Trading works the same way. You are the lion. The market is the savannah. And high-probability setups are the isolated gazelles. But most traders don't behave like lions. They behave like hyperactive hunters chasing everything that moves. And that leads to one of the most destructive habits in trading, overtrading. The overtrading trap. Overtrading is one of the biggest reasons traders lose money. It doesn't happen because traders are stupid. It happens because they're human. Humans crave activity. We're wired to believe that doing something is always better than doing nothing. But in trading, that instinct becomes dangerous. Let me tell you a quick story. When I first started trading, I believed that success meant being active. I woke up every morning excited for the market open. As soon as the first candle appeared, I was scanning charts and looking for opportunities. And when I say opportunities, I mean excuses. Any signal, any pattern, anything that looked remotely tradable. One week stands out clearly in my memory. I took 23 trades. 23. And do you know how many of those trades actually matched my strategy? Maybe 5. The rest were impulse decisions.
a candlestick that looked interesting, a level that might act as support, a comment from another trader. By the end of the week, my account was down nearly 20%. But when I reviewed my trading journal, something interesting appeared. Those 5 trades that followed my system, 4 of them were winners. If I had taken those trades alone and ignored everything else, I would have ended the week with a solid profit. Instead, impatience turned a winning strategy into a losing one. That's when I realized something important. The biggest threat to my trading account wasn't the market, it was me. Why waiting is so difficult? Waiting sounds simple, but psychologically it's incredibly hard. We live in a world built around instant gratification. Food arrives in minutes, movies stream instantly, messages get replies within seconds. Everything is fast, everything is immediate. Trading operates on a completely different timeline. Sometimes the market moves quickly, but often it doesn't. Sometimes the best opportunity appears after hours of waiting. Sometimes it appears after days, or even weeks.
And that waiting period can feel uncomfortable. Your brain starts looking for ways to relieve the tension. Maybe there's a trade forming somewhere else. Maybe you should lower your criteria just a little. Maybe this setup is close enough. That's how overtrading begins. The psychology of action bias. There's a concept in psychology called action bias. It describes the human tendency to favor action over inaction, even when doing nothing would produce a better outcome. We see this in sports. A soccer goalkeeper facing a penalty kick often dives left or right. Statistically, they might have a better chance of blocking the ball by staying in the center. But staying still feels wrong. It looks passive, so they dive. Traders experience the same bias. Sitting still feels uncomfortable. Taking a trade feels productive, even when the trade isn't good. And that bias can quietly destroy your trading performance. The power of selectivity. Professional traders understand something that beginners often miss. Their edge comes from selectivity. They are extremely picky about the trades they take. They might watch dozens of potential setups during a week, but only act on a handful. This selectivity improves everything. Win rate improves, risk to reward improves, drawdowns shrink. But perhaps most importantly, emotional stability improves, because fewer trades mean fewer emotional decisions. Building a system you can trust. This leads to another critical concept. You need your own system, not someone else's, not a strategy copied from a video, your own system. A system you've studied, tested, refined. Because when you trade someone else's strategy, you don't truly understand it. You don't know when it should work. You don't know when it might fail. And the moment you encounter a losing streak, doubt creeps in. You abandon the system. You start searching for something new. But when you trade a system you built and tested yourself, something changes. You develop conviction. You trust the process. And that trust makes patience possible. Confidence comes from data. True confidence in trading does not come from hype. It comes from data. Backtesting, forward testing, journaling, tracking results. You need to see your strategy perform across hundreds of trades. You need to understand the statistics behind it. Win rate, average loss, average winner, maximum drawdown. Once you have that information, losses stop feeling personal. They become part of the statistical process, and that mindset shift is incredibly powerful. Handling emotions in trading. Fear, greed, excitement, frustration, these emotions are inevitable in trading. The goal is not to eliminate them. That's impossible. The goal is to prevent them from controlling your decisions. Professional traders develop a simple habit. Before entering a trade,
They pause and ask one question. Does this trade meet my system's criteria? If the answer is yes, they take the trade. If the answer is no, they wait. Simple, but not easy. The long game. One of the biggest mindset shifts in trading is understanding the time horizon. Trading is not a sprint, it's a long-term skill. Most consistently profitable traders take years to develop their edge. The early years are education. They are the tuition you pay to the market. But if you survive that period and continue refining your process, something remarkable happens. You stop chasing. You stop reacting emotionally to every move. You begin operating with calm confidence. And that's when trading becomes sustainable. The final truth. At its core, trading is a waiting game. It's a discipline game. It's not about taking more trades. It's about taking better trades. The traders who succeed are the ones who can sit still, who can watch the market for hours without feeling the need to act, who can ignore the noise, who can trust their system. Because the market will always be there. There will always be another opportunity. But your capital is limited. Protect it. Be patient. Wait for your edge. And when it appears, strike with conviction. That's how this game is won. Not by trading more, but by trading better. Trust your system. Trust your process. And most importantly, trust yourself. Because in the end, the market rewards patience. Be patient.